Welcome back to another Hawkeye update. My name is Randy Lindsay. If you're like me, I like to trade equities, and I especially like to trade ETFs because it gives me a lot of flexibility and options when trading in the markets. For example, if I'm looking to get long in a market and I want to be bullish, then I've got two options that I like to trade with. The first one is the TNA. The TNA is a 3x leveraged, a bullish small cap ETF. The other is the TZA. It is a 3x leveraged bearish small cap ETF. These are two great options that I can look at and do my analysis on and trade during the day. And if you're like me, I can only trade long shares in my IRA. I can't take shorts in the account. So when I find a great setup in one, like to the bullish side, and if I find a nice setup in the short side, then I will trade the TZA. So the TNA is for bullish and the TZA is for bearish. And I'll show you some examples. Right here, you can see the analysis I've done on the TZA shows for a really good short setup. If you look at the 60-minute time frame, you can see a really nice bearish signal of engulfing volume on the previous day. Yesterday's volume never did anything. It just kind of came through, opened up strong, but came down really hard and then traded within that range the whole day. If you look at a 5-minute chart and if you go back on looking at the Hawkeye Kiss, it gives you a validation that we are looking for a short in this market and we're waiting for that setup. So let me turn on my space tracking here and show you exactly what I'm looking at. At this point, you can see right here that the open and big bearish engulfing, here it is right here, engulfing bar that came in, was signals as a short trade setup by our Hawkeye Kiss. Whenever you see the red going greater and less than the green, then the overall market sentiment is to the downside. So this is a real good indication. Now there was no real signals to the downside at this point because right here you can see after the volume triggered a search for liquidity in this market, then the trend started to go down. So the trade didn't show up on that day. The trade is the one that came in on the following day because it still showed the intent of volume, showed the direction was to trade down. So if I'm looking for a potential downward move, I know I cannot trade the TNA because the TNA is going to give me a signal and it's going to go short because this is be a bearish market. Why do I want to trade the bullish ETF? The TNA is the bullish ETF, so it obviously will go down. So when you get a big gap down on the opening of the next day, you can see at this point the kiss is still very much bearish. So when the volume signature that we see here shows for a bullish intent for the day, that shows for a basic liquidity hunt. Price trades back up to fill the gap until it gets to a point to where the sellers in this market are ready to rally. What the kiss showed is that we still remained bearish the whole time. So throughout this short-term correction, you could have taken small profits, but I wouldn't trade this because it's just no signal. The signal came way too late and it was already filling the gap of the day. So waiting for the signal to go short, volume signaled that the gap had been filled, that the intent was to go short. The first bar gave the natural direction of the trade, and then boom, from that point you can see you're off to the races. Now, using multiple time frames to confirm this, you can even see on the 30-minute that the same signature of a short sell came and was identified even as a double top. You have a nice double tap bottom, which the gap broke. The gap came in, broke that, came back up, validated the break, basically filled the gap, and then that's what you're looking for. Volume and price working together to give you a trade setup that you can go in with high amount of confidence. So in trading an IRA, I switch over to the bearish ETF, which is the TZA. Looking at the exact same analysis, if I look at a 30-minute our 60-minute chart, you can see that the volume signature here, big bullish engulfing bar, correction back, failure to rotate, price pushing right back up into this open, big gap up on the open. See that? Big gap up showing bullish intent. Now this is the bearish ETF, so we know that if the market's going down, the bearish ETF will be going up. And that's what I want to see. I want to see that. This failure to rotate back down to new lows, the kiss showing that it's still a bearish market, and that's exactly what I want to see. When I see this open, the gap fill, and then the price get back to a point that breaks the opening range with strength, that is my entry. That is the point that I want to get long in this market and in my ETF. That with this ETF in my IRA, that I can do. So let me show you exactly how this particular trade setup ended with an initial entry point right here. Bullishness, validation, confidence, multiple time frame confirmation of an entry. I was able to take this with a entry point at about 51.47, trade and hold to the end of the day because my Hawkeye stops helped keep me in. I was able to take about $3.35 off of the trade. You could have taken $3.35 off of that just with simple price analysis and looking in. No, it would have taken you 2 days to do this, but 2 days and 6.5% profit off of that, that's not bad at all. That's not bad at all. $3.35 on a regular share. Most people trade with 100 shares. That's $335 in a day. Now, if you had taken this with the Hawkeye levels, you have a levels ATR, or you have the Hawkeye ads. Either one, if you had to take those and place these on the trade where you had entered right at this point, you can see the 0 point for the trigger and the entry off of this bar anywhere. You would have been able to take $335 in profit on 100 shares. Had you used the profit accelerator, then you could have taken that initial 100 shares, added 300 more shares during the first pullback, showing weakness, but then returned to strength. You could have added 200 more shares where the weakness again returned to strength, and again another 100 shares where this weakness came back in, validating a return to strength, and then again an exit at the end of the day. Each time, volume validated the return to a bullish trend. Now this was a bearish ETF, but we were able to take it on the long side. So if you're trading an ETF and if you can only take longs, the TZA and the TNA are two excellent ETFs to help you to take advantage of these tools. And Hawkeye is the excellent tool to help you make that happen. If you want to learn more about this, come to my weekly training room every Wednesday at 9:30. Go to our website, hawkeyetraders.com, and sign up. Or click on the links here on this page to download a copy of our free ebook to show you exactly how to use volume with price in these markets. Or if you want to take a 2-week free trial of our amazing software, then click at the link on this page. Sign up for a 2-week free trial of the software that I've just shown you today. You'll be able to put it on your computer and see the same results that I've shown you today. Thank you for your time, and I'll see you at the next update.